to kick it off, this program is a no income and potentially so no income, no verification, no potentially no asset product. Okay, so let's start with a few of the, looking at the matrix, some of the key things here. It is only for a primary residence. Okay, not investment. Okay, not secondary home. It's for primary residence only. Okay. The cool thing here is that not only is it for U.S. citizens, but you can be a non-permanent resident as well on this product. Okay. Now, how this works is this. I'm gonna kind of take you through almost a what do you call that? Like a client interview. Okay. I'm just gonna kind of whiff one off the top of my head. So let's just say Abby. Okay, Abby's a client. So Abby calls, "Hey Rogner, I am in dire need to cash out some money right now." I'm like, "Okay, Abby, let's see how we can help." Well, Rogner, before you go on, I know what you're going to ask. I've already spoken to some lenders, but here's my situation. I am an actress, but I don't have big gigs. I work very sparsely here and there, but I really haven't worked for the past year to two because I had a big project a few years ago, made a lot of money, and decided to travel around the world. So great. That sounds like a great life right now. So, yeah, but I really need about $500,000. Okay. So, what's your income situation? Well, to be honest with you, for the past 24 months, I've earned zero income. I was like, whoa, okay, great. All right. Well, what's going on? Well, like I said, I'm an actress, and obviously I get paid per project, and I just haven't been working because I've been traveling. All right, well, let's start with this. Well, how's your credit? She's my credit's okay. My credit's in the high sixes, but I've made some missed payments recently because I've been traveling a lot. So I have a few missed payments there, but my FICO's in the mid sixes. Okay. Do you have any reserves? Well, I do have reserves, but as a beneficiary. My grandparents passed away, and I do have access to this amount of funds, but I can't access it without permission through my sponsor, who is our financial advisor. Okay. Do you own any other properties? No, I don't. All right. Let's see. Well, fortunately, we do have a product for you. Okay. However, we're going to need to work on your credit. Okay. This program does entail that we have a minimum FICO score of 780, depending on how much you want to take out. How much do you want to take out again? Was it 500? Yes. What is your value worth? Oh, the value of the property is worth about 1.2 to 1.3. Great. So you're going to be under 75% LTV. So that's going to require at least a 680 FICO score. She's like, "Oh, I'm not sure if I'm going to quite be there. I think the last time I checked, like I said, it's like 660, 670. All right, why don't we have you apply? Let's pull your credit. So let's just say that Abby pulls her credit at 660. Abby, are you willing to do a credit repair? Yes. How much is going to cost? A few $100 to maybe $1,000, just depending on what we're trying to achieve here, what your score is at, and what we're dealing with. She's like, "No, that's doable." So we do a credit repair. It comes out 700. Great. We get the credit repair. Abby, we're ready. All right. What do I need to do? Provide me your driver's license, a credit card to order the appraisal, your homeowner's insurance, and that's really about it. Really? Yes. Great. Now, Rogner, explain to me, what kind of loan is this? Well, this is like a giving tree. Have you heard of hard money? It's like, yeah, whoa, Rogner, hard money. I know those interest rates can be really high. Well, again, this is not a hard money. This is more a private money through our institution. We have many different, avenues of private investors, and their rates are actually, pretty good. It's probably going to be around like 10% or so. She's like, "Okay, that's not too bad. I mean, it's still high. Let me see what I can do, Abby, for you." Okay, well, let's get the application in. Now that you've applied, let's see what we get. You're a loan officer, you do your whole thing, you already know you're going to change wholesale, and you quote her the rate of, hey, Abby, actually, I come to find out, the rate is actually not going to be 10%. It's going to be 8.875. She's like, okay, I mean, that's better. Look, Abby, the idea, the idea here is, you're going to either pay this off in the next 12 months, 24 months, or, we're going to look at refinance opportunities. Hopefully you pick up another gig through Hollywood, you make some money, you can pay it off, or we can refinance it. Or, Giving Tree, we're constantly adding new lenders. We are working with this new lender right now. Their rates are a little bit more affordable, or attractive rather. Hopefully once, it takes about 3 months to get them reinstated into, as a lender, and maybe we can look into that after 6 months. Okay, Ragnar, that sounds great. So what do you need from me right now? Like I said, Abby, just your application, run the credit. We'll rerun the credit now that repair is done. Your driver's license, credit card information to order the appraisal, and your homeowner's insurance. If there's HOA, then HOA, but I don't think there's HOA in this, correct? There's no HOA. Awesome, that's it. Okay, so guys, that's kind of a sample. I don't know how long that took. 3 to 5 minutes there I took. That's a real life scenario of what happened with a client of mine. And she's a client that Brenda notarized loan documents for yesterday. And we got this completed after the credit repair. We got this completed in about 3 weeks. Okay, for sure less than 4 weeks. So to summarize, what does this program entail? This program entails, well, let's talk about what it doesn't entail. It doesn't entail your employment. It doesn't entail income documentation. It does not entail a VOE, a verbal nor a written VOE. All it requires is an appraisal on the subject primary residence. That is it. Okay. Well, what if you have another residence or rental property? Doesn't matter. Okay. It's only on the subject, which is the primary residence, and that's it, the appraisal. Okay. And you see the matrix posted there on the screen. You can go up to 80% if your FICO score is 720 or better, or 9 months reserves, or 75% if your FICO is 680, but you only require 6 months reserves. Okay. Now, here's the beautiful part about Abby's case. Like I said, Abby doesn't have any cash in her name. Okay. She's a beneficiary to a retirement account or a money market account, but she has to go through her sponsor, which is the family financial advisor. So it's not technically in her name. She's just a beneficiary. But with this program, okay, under Change Wholesale, okay, you see right there, reserves. Under the reserve section, the third to last category, cash out can be used towards reserves requirement. So in the case of my client, Abby, she was doing a $400,000 cash out. By the way, her property was free and clear. She inherited it free and clear. $400,000 is more than 9 months PITI. I think her PITI is like $4,100 or so. It's way more than the 9 months or the 6 months that's required. Well, the cash out suffices the reserve requirement. It is that simple, guys. So kind of going back to the conversation, right? You can, as a loan officer, sell this as a hard money option. It really is a non-QM product, okay? A stated non-QM product. But you as a loan officer, because it's truly a stated income product, you can sell this as a hard money private money, okay? And if you guys have dibble-dabbled in the hard money private money space, you will know, and you come to find out if you haven't already, like Giving Tree has a private money investor, minimum $80,000. Peter talked about this a few weeks ago, but the interest rates are 20, 21, 22%. Okay. And that's not unusual. You can find an institutional hard money lender who might lend you somewhere between 10 to 12%. But again, I sold this one at with change wholesale at 8.875. Okay. Now that is the lowest rate that it will go, I believe, at 8.875. Um, um, and it's the lowest at the lowest a cost discount point. There is no rate at par rate, and I'll bring that up actually. Okay, there is no par rate. Okay, it's there's at least going to be a 1 point rate, and so. But here's the thing: when it comes to hard money, private money, okay, um, they're going to be charging you between, you know, I mean, 2 points is very generous. Okay, you have to understand that 2 points is very generous. I did that one of those private money deals through Giving Tree earlier this year with my client, not Isol, Cora. We charged her 5 points, and that was on the generous side with the investor. Okay, and that's not unusual. I know a private investor of my own. She's a friend of mine. She charges 10 points up front. Okay, so when you're charging on this one, I charge a total of 3. What 1 point to the investor and 2 to me, it's not that bad. Okay, so here, let me bring up the change community rate sheet. Okay, so you'll see here at the very top, if you haven't seen this already, okay, their rate right now is 8. Oh, it's actually even lower right now. So it's 8.75, okay, at 99. So it's always going to be a 1 point cost. Okay. Now, obviously, mine at 400,000 on a 1.4 is way less than 60% LTV. So there's no LLPAs there to increase the rate. But look at this. If you were to have taken out more money, it seems like there would have been pricing adjusters for the betterment. That's interesting. That's very interesting, actually. Huh. That part I didn't know. Um, so I guess they want the bigger bucks. If I'm reading that correctly. Oh no, I'm sorry. I'm saying no, it's subtracting out. Okay, this one has a usually if it has a improvement, they'll subtract it out. But okay, no, I'm sorry. Yeah, this is gonna get worse. So they're starting at 99. If they took that up to 70%, then it'll be 98.75. So instead of paying a point, they'll have to pay 125 basis points as opposed to 100 basis points. So yeah. But this page here will, you'll see their fees. There's tax service fee 69, flood search of 12, application fee 17.95. It's a little bit higher again. You know what? For that matter, let me bring up my CD, and I'll show you guys my CD. Here it is. I'm gonna share this tab instead. So if you guys can see this, right. So slightly less than $400,000. 8.875 is a rate. Okay. Right. Their underwriting fee is a 17.95. That's the 1 point. Okay. That's their 1 point. And then here's my 2 points. Yeah, actually, I didn't realize I charged a little bit more than 2 points. Okay. So that's that. Okay. Appraisal. There is going to be a desk review fee of $250. She paid that out of pocket. Everything is as usual. Okay. Impounds are required. Okay. So I had to explain to her, hey, you'll get this money back if you pay it off, but this is your money, but we do have to impound it. She wasn't opposed to it because, again, it was convenient, the convenience factor. But there it is. There's a real life example of the one we just that I just well, the loan docs got signed yesterday, so fund on Friday. Okay, a little over 2 points. Okay. Now here's the kicker to this program. So I did one last year in October for 1.4. Okay, property. Here, mom. Here's a story real quick. Mom owns a property free and clear. Dad passed away 3 years ago. Mom lives on Social Security income. She didn't work, so it's like $878 a month. And she collects a very small pension from the father's passing, through the father who passed away. It was like, I can't remember. It was like $1,400 or so. Okay, but she lives in a $2.2 million house in Tustin. Okay, obviously, even without having any debt, and the house is free and clear, $1,400 plus, let's just say $900, $2,300 isn't a lot of money to live off on, right? And she had some savings, don't get me wrong. She had some savings. Now, daughter and son wanted to upgrade their houses, okay? So she pulled out $1.4 million. She pulled out $1.4 million to help her son and daughter purchase or upgrade into their homes, upgrade their homes, okay? Now, at that time, the rate was at a 9.375. Obviously, this at a 1.4, 9.375, it's about a $14,000 P&I payment. It's a heavy burden for anyone, even if the daughter and the son are sharing. So guess what? It's been a little over 6 months. Okay, they want to refinance it. So now I get to refinance a $1.4 million property. That was my other win for the week, actually, from last week. This just came through last week through some calls or text messages that I made to my book of business. But now we're going to go through a DSCR program because the mom actually the true story is she does not live there anymore. She moved in with she moved in with a daughter in San Dimas. She bought a new house in San Dimas. Mom now lives there, and they're renting it out. So we get to do a DSCR. We're looking to lower the rate from a 9.375 to a 7.5. It's going to reduce her payment by $4,000. It's going to be like a $10,000 payment. Okay, $4,000 payment. Hey, they're going to take that. And I'll discuss that maybe in another video, how I structured it and whatnot. But using this Change Wholesale Community program, it's like a bridge program, right? It's attractive in that it's much more affordable and much more attractive than a private money or hard money. It's slightly harder than a true non-QM loan, bank statement programs, DSCRs, which can be in the 7s and 8s, right? This is just right at 8.75 or 9, right? In my case. But it gives you the opportunity to refinance this again within 6 months or after 6 months or within the year, because they don't want to be paying on that high rate, right? Just like hard money. Hard money is there has to be an exit strategy, right? You get someone the hard money, they got to sell that loan one way or another, refinance out of it, sell the house, something. They got to get out of it because the terms are only for 12 months, 24 months on hard money. Well, with the Change, I don't know if you caught that, it's a 30-year fixed rate, right? So that's another selling point. They're not required to get rid of it right away like a hard money or private money. However, they don't want to keep the high rate, so they most likely will want to refinance out of it. That's the opportunity for you then to capture that business once again. Okay, so it's really a 2-for-1, really a 2-for-1 on community, the community program. So it's just, again, more business, more commission, more money in your pocket. And so I love this program, and it really does help people in need, right? Again, now many times you're going to come across clients who need that type of money so quickly or so much. Their credit isn't doing so well. Do a credit repair. both of my files required a credit repair. Okay. So regardless of what, I've had some good and bad and not so good experiences with SOS Group, but at the end of the day, they have always pulled through and come through. Some took a lot longer than others, but they've always come through. Okay. Any questions? I know I kind of just went through it, for the past 20 minutes. Do you have any questions on how it works? Any feedback, guys?
The EPO period on this program is still 6 months?
Correct.
Okay, thanks.
Can you walk us through what the 1003 looks like?
Yes. It's just like any other 1003, except you don't fill out the income portion, the employment section. Here, Brenda, let me see. I could pull up the 1003.
You just put employment as actress and then position as actress.
I could be, here,
you don't disclose any employment.
Yeah, exactly.
You don't disclose any employment or income.
Yep. But
Okay.
You put in everything else except the employment. Obviously, like Ragnar said, it does require some reserves. Depending on the LTV, we can use the cash out for reserves. If we don't qualify for that, we could ask for exceptions, but for the most part, we would have to put in assets to cover the reserves. But other than that, the income stays, and employment income stays blank.
Yeah, I'll do you one better, Ian. On the screen, I'm sharing you the application right now itself. So you'll see, the name, obviously, and then here's section 1B, current employee. There's nothing.
Okay.
Yep.
Slow down. I'm trying to get her telephone number. Just kidding. I'm married. Okay.
Yeah, I say happily here too. And great question, but yeah, you guys see it. It really is probably these. Okay, I'm gonna go as far to say right now, I'm gonna make this claim. This is probably by far the easiest loan consultation and process. It is the easiest loan program we have that we offer at Giving Tree, even over the hard money options. Just because with hard money, like, you have to have an extra strategy, right? And there's a lot of stuff on the back end that we have to do, right? Look for investors, back and forth, negotiate. The rate is set. You know what you're getting in yourself. I mean, Change is a big company. Yeah. Once you get your, it's like 1, 2, 3, really.
Okay. I got one more question, Ragnar.
Yes, sir.
Her residential history, was she there for over 2 years, or was that necessary?
That's a great question. I don't know. Okay, well, I know how long she's been there.
It's only, you said it's only an owner-occupied home, so I'm not sure how strict they are with that.
Yeah. So she's actually only been there for 1 year. When I say I don't know if there is a seasoning requirement on the house, but I imagine it's 6 months to do a cash out. And you know this in real estate, in lending, any cash out program requires a minimum 6 month seasoning. But yeah, she's only been there for 1 year.
Okay, and you have to prove that she's living there, right? Because it's owner occupied, or she will be living there.
Yeah. So here, let me answer this. With this one, I'm just being transparent here. But with this one, yeah. So yes, to answer your question, you do have to prove that you're living there. With this one, it's very unique. Actually, she actually doesn't physically live there and occupy it. And the reason why I say that is because she does have a boyfriend in Texas, and she lives there 9 months out of the year. But yes, her name and title and utility. Oh, this one we did need to provide a utility bill, actually. But is in her name. So yeah, we were able to get away with that.
Got it. Thank you for clarifying.
Yep. Any other questions, guys?
How you said it took 30 days, right, Rog?
No,
For your refi?
It really took 2 weeks plus.
Okay. Is this the same program that if it were a purchase that it was recommended for a 45-day close?
No.
It's not this one. Okay,
No.
thanks.
Again, guys, truly, and as Brenda attested it, there is zero income. There is zero income validation or review here. In fact, guys, there is really not even a DTI here. They don't even care about your debt. It's almost like a DSCR, right? They just want to see, is there enough equity? And do you own the house? And that's about it. And do you have the FICO score? That really is it. It's an amazing product, guys. I just don't know how long it's going to be around. But you know, from my last one to this one right now, it's been what, 9 months? So it's still around. But it's I really challenge you guys, okay? Make a commitment to try and sell just do one this year. Okay, just do one. Okay. I'm not telling you to charge 2 points. If you really need to get it, charge 1 point and 1 point to the lender. So really total 2 points, but just do it. It's so easy, right? And just go through it. Just experience it. Because, and I'm saying that because there's also a real need for this for people. Okay. If you're not coming across clients who are telling you more and more that they need money, they need some reserves, they need cash flow, I'm going to bet that you're not having conversations. Okay. That is a number one topic right now, more than, oh, I want to buy a house. Sadly, the conversation right now is, Ragnar, how do I pull out equity? How do I pull out equity? Because I'm behind on my credit. There's a client I told you guys a few weeks ago that I made a few calls, like 17 calls, right? And like 3 of them submitted applications. One of them, during the process, missed their mortgage payment. I can't help them out anymore. Okay. Their only option is to do a hard money, 22%. They don't like it. I still am expecting a call from them saying, Ragnar, is that offer still on the table? Because I know they're hurting right now. So unfortunately, very sadly, that is the reality right now. Every day there's news media outlets are talking about it, publishing something about, credit card debt's continually on the rise. Americans are tapping into equity more. Sadly, that's where the business is, right? I hope this is not a repeat of 2008, 6, 7, and 8. But there is some, and I don't know, Ian, if you want to speak to it, but there is some mirroring of that right now, right? People are, but for worse purposes right now. People back then were pulling out equity because they could, and they're like, wow, I have this much equity. Awesome. Not necessarily being in a dire predicament. Right now, we're seeing homeowners and Americans kind of in that dire predicament where they need to have the funds, not because they want to have the funds. But it can be a solution for some, right? I mean, in the case of my client, it was just to, fulfill a want, not a need. But others can benefit, especially if your credit cards are 22%, right? Anything else, guys? Any other questions? Otherwise, that's it.